Hello folks, so today let's talk about the institutional order flow entry drill. This is a very powerful entry pattern that once you master, it's gonna significantly increase your trading performance, and it's gonna keep you amazed at how precise this execution strategy can be once you get it right. There are a few things I would like you to get it right when using the order flow entry drill so that you don't get caught up in the wrong entry drill. Number one is that you must trade in the direction of the order flow. You must trade in the direction of the higher time frame directional bias. You must be able to tell exactly where the directional bias is on the higher time frame and where the next probable drawn liquidity is residing, either above the market. Once you are looking to buy, you need to see clearly that there's a drawn liquidity residing above an old high, above relative equal highs, or above equal highs. That's where buy side liquidity is residing. Then if you are selling, we need to clearly see a drawn liquidity residing below equal lows, old lows, or relative equal lows. That's the sell side liquidity pool. The institutional order flow entry drill is not the magic itself. The magic is in your ability to confluence or identify this entry pattern in the direction of the order flow. There has to be a directional bias. There has to be something you are looking for. There has to be an objective you are looking for. There has to be an objective you are looking at the market trading into before you look for this entry pattern. So basically, there are two types of order flow entry drill. The first is called the order flow type 1, the order flow entry drill type 1, or I simply call it the IOFED type 1. So we can simply say the IOFED type 1. It's called the institutional order flow entry drill type 1. Then the other one is the IOFED type 2. And in today's session, I'm only showing you how to apply this entry pattern on the 1 hour time frame. So we are looking for the IOFED, whether the type 1 or 2 on the 1 hour time frame, to look for entry signature. The amazing thing is that we saw this signature printed out throughout this week's price action. They just concluded week price action. I literally saw this guy printed out this entry strategy, and we took advantage of that model and price delivered in direction of the objective. Okay, so I said first identify the objective on the higher time frame, then you come down to the lower time frame to identify either the IOFED type 1 or IOFED type 2. The IOFED type 1 is we need to see price action create a fair value gap by the left and fair value gap by the right. So you have a fair value gap is a 3 candle price action. For example, if price action is selling and we see price action create fair value by the left and fair value by the right, this is what it means. Okay, so we have an area where we see price create fair value gap right here by the right, and when you look at the left, you also see that there's a fair value gap there, and price action is returning into that fair value gap. That is IOFED type 1. This is for a sell scenario. The same way, if you are looking to buy, we need to see price action create fair value gap by the left, fair value gap by the right, and as price action returns into that area, we will look to take advantage of it to buy, because we see the order flow entry drill printed out, and I'm going to show you how to the criteria for taking execution using the IOFED. So if you see fair value by the left here, and you also see that there's a fair value gap by the left that was violated, price action is returning into that fair value. That is an IOFED type 1. We take a buy at the low of the fair value, and our stop loss is supposed to be below the low of the third candle, the low of the second candle of the fair value gap. We take an entry right there at the low of the fair value, and our stop loss below the low of this candle. If we are selling, we take an entry at the high of that candle with our stop loss above the high of that candle. That is IOFED type 1. The second type of IOFED is when we see price action prints out fair value gap and an old high or old wick in between. So let's say we have a fair value gap right here. You see that fair value here, the gap right here between the low of the first candle and the high of the third candle. That's a fair value gap, and we see that there's an underlying old high in between right there. Okay, or better put, we see an underlying old low in between, something like that. Okay, so as price action returns into that fair value gap, the criteria is fair value gap with an old low in between. That is IOFED type 2. We sell from the high of the fair value with our stop loss right there. Another scenario is if we see price action, trading higher, just like that, and we have a fair value gap right there with an old high in between. As price action returns into the fair value there, you see that the low of that candle, that is a buy with our stop loss below the low of this candle. This is IOFED type 2. I believe that this is clear enough. Remember, the magic is trading the IOFED in confluence with the order flow. So this week, let's take a look at the dollar index, because the dollar index is the benchmark asset for the dollar and dollar associated currency. And we saw the dollar this week on Monday reacting off a bearish mitigation block right on the daily time frame. That is a bearish mitigation block. Price action had created that shift of structure and returned into the bearish mitigation, taking out the previous week's high there. So price traded into that mitigation block on Friday, and on Monday we saw price action open and started to drop. Okay, so right here I think we've been projecting that the dollar is bearish from this point, and we're looking at the dollar trading into the drawn liquidity on the monthly, the weekly time frame, and even the daily time frame. You can see it's reacting on that bullish order block. We called this in our previous analysis. Just go to the previous videos on this handle. You're going to see how we've been projecting the dollar, calling the dollar lower, and price action played to script. Then on the 1 hour time frame, this is where you are looking to take executions, and just in case if you see price action create your entry model, that is where you are looking to take executions. Okay, so on the 4 hour we saw a bearish order block creating resistance for price action to trade lower right there, and look at what happened. We saw price action created that displacement lower right there. You see that displacement there, and what do you see right on the 4 hour here? I'm even seeing an IOFED, but let's just go to the 1 hour time frame for clarity, because if you take a look at the 4 hour, what do you see? You see that there's a fair value gap right there, fair value gap right there. You see that fair value by the right, fair value gap by the left. That is IOFED type 1. Fair value by the right and fair value by the left. And on the 1 hour time frame, on the 1 hour on the dollar index, price actually traded into the bearish order block there, created an expansion lower, and on Tuesday we saw price action created a shift of structure right there. You see that, and printed out our entry signature, which is the IOFED type 2. You see that IOFED type 2, the fair value gap with an old low in between, that is IOFED type 2, and we're looking to take executions at the high of the IOFED with our stop loss above the high of the candle here, and we're looking for the next objective lower. Price action created that expansion on Tuesday. At the same time this is happening, we're looking for execution on the euro dollar. So we're going to look at the euro dollar and see if the euro dollar creates our entry signature. So this is the euro dollar. At the same time, the dollar traded into that 4-hour bullish. At the same time, dollar. So this is the euro dollar. At the same time, the dollar traded into that bearish order block on the 4-hour time frame and started to sell. We saw the euro dollar traded into an opposing bullish breaker right on the 1-hour time frame. You see that created that expansion or displacement to the upside and creating an IOFED type 2 entry. Do you see that? The magic of this model is if you see price action returning into the IOFED during the London or New York session, during the kill zones, that's where the magic is. It's not looking for this in every other trading hour, but during the kill zone. The fair value gap right there, or rather the gap by the right and the gap by the left, that is IOFED. Price traded into that level. Do you see that? We take a buy from the low of that candle. We take a buy from the low of that candle on the Euro USD, and your stop loss is below the low of the third candle there. Okay, and your profit target is the overall objective, so it will mean the relative equal high right there is your objective drawn liquidity. You see that price action delivered using the IOFED. Again, on Tuesday, price action created IOFED type 2, the fair value gap right there. Fair value gap by the right and the old wicks in between. The magic is looking for entry during the session. You see that this is 5 a.m. and 5 a.m. is London session. Price traded into that IOFED there. That is a buy. You'll have taken that entry for the first time, and stop loss right at the low of the candle there. You see that price action created an expansion, traded back into that level, but again created that expansion higher. My friends, if you take your time to do a lot of hindsight study to identify this model on the chart, you are going to see that it is always printing out a lot of times on the chart. You're going to see this entry, this model again and again on your chart. All you need to do is to go and do your work, go and do the hindsight study, go and identify this in hindsight, and it's going to change your trading game. And if you'd like to join me and learn more about this concept, precise trading models for finding consistency in your trading, you can check out the link on the description of the video and join my one-on-one mentorship. My one-on-one mentorship is not very cheap. It's actually not very cheap. It's one-on-one. If you are looking to get a dedicated attention, dedicated supervision, where I get to check and supervise your trading account just to ensure that you are doing the right thing at the right time, then the one-on-one mentorship program is the program you should be signing for. Check the link, reach out to my personal assistants. They're going to sign you up for one-on-one mentorship. I hope you learned something in today's session, and if you have, kindly click the subscription button. Don't forget to turn up your notification bell so you stay updated every time I post a video. Until next time, I wish you good luck, good trading, stay safe.